Hey everyone, welcome back to my YouTube channel. Today I want to talk about free money, because let's face it, who doesn't want free money? This video is also kind of directed towards new investors out there that may be a little scared about putting their own money at risk while they're learning how to go about investing. As all you know, I do use Webull to purchase my stocks and use my Roth IRA. One of the benefits of Webull is paper trading. So, down in the description, you'll find a link to sign up for Webull. It doesn't cost you any money to sign up, and they'll give you 2 free stocks if you complete the process within 24 hours. If you do have at least $100 that you want to deposit, they'll give you another 2 free stocks for a total of 4 free stocks. But initially, all you have to do is sign up for the account, complete the whole process, and they'll give you 2 free stocks. And then you can do something on there that's very cool. With no risk to your own money, they give you a fake account where you can practice trading. It's one of the great ways that you can go about learning how to buy stocks, whether you're doing a market order or a limit order, and how you want to sell stocks, how long you want to hold, how do you do your research on these stocks? Where is all the information found throughout their website? There's a learning curve here, and if you don't want to put any of your own money at risk, paper trading is a great way to do that. And there's another benefit that Webull has come up with their paper trading accounts. Webull has a paper trade competition. Within this competition, you can practice buying and selling stocks, and you can also win prizes. It's usually a week long, and it tracks how much profits you're earning throughout the week, and you're competing against other people out there who are paper trading. So whether or not you're a beginner or an experienced trader, signing up for Webull and using the paper trading account's a great way to have fun with purchasing stocks. So pause the video, go down to the description, and click on the link to sign up for Webull. It will get you 2 free stocks just for signing up. And then once you become comfortable with the paper trading, if you add $100 to your account within 30 days, they'll give you another 2 free stocks. Make sure you read all of their disclaimers and information on their site. Their referral programs and their free stock programs are constantly changing. They do have timelines and limits and rules. So make sure you read all that information on there as you sign up, because you gotta follow their rules. I don't set their rules. The link's down there. Go ahead and click on it if you'd like to trade. Now I'd like to talk about what stocks I've bought recently. One of the stocks I've been following is US Steel. I'm pretty excited about the potential for long-term growth with this stock. So this is actually a stock I'm investing in and not trading in. In 2018, US Steel was trading in the $30 and $40 range. Today it's trading between $18 to $20, and I hope it'll go up from there. It does have a dividend that pays out every 3 months, but there's no guarantee that that dividend will continue. One of the things that's potentially driving the increase in value in US Steel is their acquisition of Big River Steel. They had a position and now have just bought out the rest of the company, so they now own 100% of Big River Steel, and that's driving up the price. And the potential for growth is tremendous, and I think US Steel can easily be back in the $30 and $40 range within the year. That's my hope anyways. All right, so let's recap some of my previous purchases. I was very excited about my initial increase in iBio. It went up 10%. Then it slowly started to decline, with a major decline that happened today. Today is Tuesday the 8th. As I said before, one of my processes that I want to do is dollar cost averaging. And if there are pullbacks and I still believe in the company, I want to be able to purchase on those pullbacks. So my dollar cost averaging gets me a better averaged price. So I think I may actually be purchasing more shares. iBio was down 8.22% today, and I may actually be adding to my holding there. ExxonMobil has been a great buy for me. Stock ticker is XOM. So that stock is one of the stocks that's in my Roth IRA, and I'm very excited from my purchase price to where it is today. Another stock that I bought was Callaway Golf. Stock ticker is ELY. It's not having major growth. It had a spurt of growth just before I bought it. I was a little nervous I was buying it at the high, but it's continued to grow a little bit. I also think Callaway Golf is a good medium to long-term investment. If you sell your stocks within 2 years, you have a different tax bracket than if you hold them for longer than 2 years. So I think this one I'm considering holding for longer than the 2 years. So some of the next stocks that I hope to buy or that I'm watching and following, I actually tried to buy some of NEO today. Don't tell anyone, it's a pretty popular stock and I want to keep it on the down low. But I missed out on purchasing NEO because it wasn't the one. But I am following NEO. I think the value is there. With Tesla going to the market and selling more shares to raise capital, we could potentially see a pullback in Tesla, which may actually help increase the value of NEO. We'll see. I think NEO is a great opportunity, but I'm not too sure if it's still overinflated. They're just not producing anywhere near the volume that Tesla is. And Tesla is raising capital to build out their infrastructure and to be able to increase their volume. So Tesla has the ability to increase their production, whereas NEO is struggling with that, and they have to be able to increase their production to increase their profits. But I love their designs, it's awesome. I'm concerned about the accounting practices of the Chinese companies. That's one of the things that the government has been trying to address with foreign companies listing on the US stock market. So we'll see how they do with that. I think their interest in remaining on the US stock market is fairly high. So I think they're going to do what it takes to be upfront with their accounting practices and to be able to not get delisted. It's in their best interests because I'm sure the owners of that company and the insiders have shares in the stock. They're not going to want to see it delisted. So it'll be interesting to follow. Along the lines of electric vehicles, I'm also following SBE. SBE is getting bought out or merged with ChargePoint, and it will become ChargePoint totally. And the stock price is up significantly right now. As the merger goes on, potentially there could be a pullback in the price, but it has so much popularity surrounding the whole electric vehicle and the fact that all of these electric vehicles have to be charged and plugged in. And ChargePoint has the largest market share for these charging stations, in-home charging stations. And their biggest growth potential is getting out to businesses and putting charging stations in parking lots. That has huge growth, especially if we are going to be growing the electric vehicle fleet in the United States. California is trying to make all electric vehicles required. Maybe not. There's something out there called hydrogen. I'll look into that in a future video. But yeah, electric vehicles is where our government is currently trying to push the environmental aspects of getting rid of emissions. As you know, the changing in the government and administration is leaning more towards environmental friendly businesses. And I think that can only benefit the electric vehicle company and all the services that need to be provided to maintain these electric vehicles, including charging them. Let's not forget, if we increase the electric vehicle fleet, where are we going to get this energy to charge them? Has anybody been talking about that? An electric company has to provide the electricity to be able to charge these vehicles. So one of the other stocks I'm following is Duke Power. But I'm not quite there yet on figuring out what I want to do with that. Duke is probably something I'm going to add to my Roth IRA, but I don't know yet. So it's got to grow. Somebody's got to be providing the power to charge all these vehicles. So we'll see where that one goes. And one of the other fun stocks I've been following, which was down over the past couple of days, but today jumped significantly, is DraftKings. Yes, it's gambling. Some people could say the stock market is gambling, but we call it investing. But you have to be willing to risk all of your money that you invest, depending on your comfortableness with risk. can make your investments more risky or less risky. Whereas gambling is 100% risk. It's 100% luck. There's no ability to assess whether or not your gambling bets are going to go up or down. But sports betting might be a little bit different. You are analyzing the sports teams that you're betting against or for. So I'm pretty interested in the potential growth for DraftKings. Not all states legally allow gambling in sports betting, but it's growing a lot. Like the marijuana stocks, more and more states are making it legal. So it'll be an interesting stock to follow over the next coming months. I'm very interested in seeing how that one comes. Okay, and one of the other things I'm interested in adding to is obviously my Roth IRA. I'm interested in dividend stocks. Please leave a comment below. Let me know what dividend stocks you guys like. I don't have a lot of money to play with, so I'm looking for stocks under $100 a share, and I'd love 4% or less in dividends. Now, the reason I don't go above 4% is because they're just more risky. The higher you go in your dividend payout, the more potential risk there is with that company. I'm not looking for a significant amount of risk in my Roth IRA. I want a good dividend return in a stable, possible growth company. It doesn't have to be huge growth, but I don't want Pfizer either. Pfizer's price has gone up sky high because, hey, they got their vaccine. The only thing is, their income isn't growing. There's nothing growing about the company, and they're not making a profit off of this vaccine. So all the increase in price in Pfizer, there's nothing supporting it. I don't quite know how to short sell stocks right now. I've never done it, but I might follow this one along and kind of start to figure out that process. So leave your comments down below. Let me know what your thoughts are. I am looking for interesting dividend stocks with the small potential for growth that are fairly stable over the long term, that are paying 2 to 4% in dividends. Besides the dividend stocks, we have two stocks that are about to be listed on the exchange. They're DoorDash and Airbnb. DoorDash is going to be listed for somewhere around $102 a share, and I was hopeful to be able to buy some shares in that company, but I think $102 is a lot to ask. It's got the potential because it is a coronavirus play. The amount of orders flowing into DoorDash have grown exponentially because people aren't going out to restaurants, but they are ordering delivery online. It's a huge coronavirus play, and with increased lockdowns going on, because we're seeing sick people increase and the mortality rate drastically increasing, if people aren't going to start wearing their masks, DoorDash is hugely going to increase. But is it a short-term play? Is a value there to support a $102 listing price? I don't know. When I first heard it was going to list, I was very excited to be getting in on this IPO. But now when I see it at $102 a share, not so sure. Airbnb, on the complete opposite, is struggling because of the virus that's going around. So is it worth the 40 to 60 or wherever they finally settle on a stock price to list at? I don't know. There's potential risk there for a company who has seen its income and profits plummet because of the virus. But the stock market is a bet on future earnings, and we've all seen what Airbnb's growth has been. It has done a tremendous deal in raising money, and it's also really affected the regular hotel market. So I don't know, they're interesting stocks to be watching, but give me comments down below. Let me know what your thoughts are. I'm very interested in getting this channel more interactive. Thank you for watching, everyone. I very much appreciate you guys following my channel. It's still new for me, and I hope you guys are enjoying it. Thanks very much.